so that you have a bunch of courses that you can now take and double major, double concentrate, okay? And I highly recommend that you double concentrate. Finance and marketing, finance and data analytics. I would recommend with Kimberly, is that you double major in finance and data analytics. Okay? With the programming background and everything, you're guaranteed a job. Okay? And I'm just seeing more and more jobs for finance people and econ majors with R and SQL and Python and Excel and that stuff. So it's, they're expecting more and more of it. And that's one of the criticisms of our program, from what I've heard, is that it's not code intensive. There's not enough tools that you're being taught on the computer side. And then just work in teams and stuff and learn some coding. I would say if I was going to pick anyone, Kimberly, would you say R is probably the most important? R, probably the one. Let's see what else. I'm just going to go through my list really quickly. And I'm going to go out of order a little bit. So first, what I'm going to need you to do, yeah, that's perfect. What I'm going to need you to do is I'm going to need you to break up into teams. I mean, does everybody know each other in here? Do you guys all know each other?
No.
You guys should all start exchanging information and get into teams of 3, okay? And I would prefer it if people who have taken my class before don't all clump together, bring in other students that haven't taken my classes, because you're going to be helping them out on some of the review stuff, particularly the pre-test. Okay, dudes. Okay. All right? Okay. You need to stay focused. I'll flip it off later. So I need you to get into teams really quickly, and I need you to make sure that not everybody on the team has taken my class. Okay, so that they can you can work with them, okay, to be able to get up to speed. Okay, because we're going to move really quickly, and if you haven't taken my 123, you're going to get blown in the dust. Okay, so you need to work with these guys to make sure that you're up to speed. Okay, and I'll show you why, because we are going to review the pre-test, and we're going to review the first quiz that we did in my 123, which is basically the foundation to move forward in this class. So you need to go back and reinforce and review all that stuff to be able to move forward more decisively on a solid foundation to go forward. And since this class has no prerequisite, which I think is kind of ridiculous, it doesn't have a 123 prereq. So people coming in, this could be their first finance class, theoretically, and if they're taking this class and not taking 123 at the same time, they don't even know the fundamentals of intrinsic valuation or even yield curve dynamics or any of that stuff. So I need you all to help the people who have not taken my class before and help them work through that information and work with them on the projects. Okay, and the way that it's going to be done too is you're going to break up into teams of 3. And for those who took my international finance in my 123 course, I'm bringing the team formation right up front, because it's going to be really hard to do this class, and it was hard to do my other class if you're sitting in the back and just showing up every now and then and not really doing the attendance and thinking that you can show up right before the quiz, midterm, and final and cram for it and sit down and get blown out of the water and then think that I'm going to give you a C or something in the class. That's not the way it's going to work. This class is not only assessment, but it's based on production. And the production quality, as you know, has got to be business level quality production. And if you don't take that seriously, we're going to have problems. Okay? Because the goal of the class, and this is what I've heard from the students that have taken this class and my other classes, is that the material that they produce, the memos, the analytics, the portfolio construction, all of that stuff is getting them jobs and internships and distancing them from the other competition. So that's really the goal. So it's not assessment. You come in, work on a bunch of problems, you do well, you don't do well. At the end of the semester, I feel sorry for you and I give you a C. That ain't gonna work. Okay? Everybody's got to get an A in the class. Lee, you know that. You work hard, you produce great product, you get out of here, you get your A, you got a portfolio, you can now get a serious position in these top firms, because now you've got the product to be able to show them you can compete against against the Ivy League and Cal, okay, which is your direct competition, okay? So I need you to quickly share information with each other and then break up in teams of 3, because the problem is I've had this before, when I don't do the team stuff first, people like skip class and then they call me up and they go, Professor Souza, I don't know what's going on in class, I'm totally lost. It's like, well, are you in a team? No. Do you know anybody in the class that you called to talk about? No. Did you watch the video? No. So it's like, how can I help them? Right? It's like, I've already given you 3 shots and now you're telling me that you need me to walk you through the stuff that you missed because you didn't come to class and you didn't take responsibility for your class. I'm not going to do that. Okay? You need to take responsibility. So now, break them in teams. Go. Oh, thanks a lot. You 3 guys are
Who are you with?
Okay, is it anybody not in a team?
Jerry.
What's your name?
Eric.
I don't know, Jacob.
Yeah, but I was gonna like, I don't want to just leave them. Can we do 4? Can we do 4?
Let's see how it shakes out, and then, if there's an odd person,
Okay.
you'll just have to, Eric, you're just gonna have to manage the 4th person and make sure that they're engaged and not a 4th wheel.
I don't mind.
Yeah, you still need one? Yeah.
Because I've worked in team dynamics before, I know what that is.
Can we do 4?
I'm trying to hold off on 4, I'd rather have an odd 2 team, 2 strong people in a team that having 4, is that 4th person usually doesn't do much. So the 2-person and the 3s work the best, 4s usually don't work out well. So let's see what happens. So do you have your 3s? Okay, who's the team leader in yours? Who's your team leader? Hurry, what? Okay, and then you, and you're the team lead?
Lee and Nicole.
Okay, cool. And who's the team lead? Okay, for both of you. Okay, and then are you guys a team? Okay, who's the team lead? Yeah, I knew that. Okay, and you guys are teams? Okay, and who's your team lead? Who's the leader? To make sure, okay, perfect. And then you guys in the back?
Need Jason, right? We need one more.
Okay, hold on.
One more.
Okay, and then you 3. Okay, and then you 3. And then you're in? Okay, and then how many teams of 2 do we have? Just one team of 2? You 2 and me. I'll be on your team. Yeah, so then we work together.
Yeah.
You actually count as 2.
No, you count as 2.
Okay, so you all got.
Should I just join them and you 3 or what?
And then could
Us
you do
3
me a
and you
favor
join them?
and
Cause there's,
write your teams up on the board?
we got a 4 though, so we could like split that
Oh,
up.
yeah.
So why don't,
Yeah,
I'll
bring
just
them
go
over
with
there.
them.
Yeah, perfect.
That's fine.
Okay, so there's your 3.
Yeah, that's fine.
And then could you, can you put the team names up on the board for me?
Team names?
Yeah, just go team 1 or team 2 and then put your names up, so I know who's in the team. Here you go. So the leaders put the teams up. And then, here you go. And you're gonna have to pick the team that's not being picked. So we already have a team 1, we have a team 2. So depending on what you do, you're gonna have to put your name up there. That's it.
There's one incident where there's like 4 and a half minutes that like black out and he like heard my accent. You motherfucker. He's just gonna say motherfucker because he thinks that's like what we say. And I was like, this guy's sick, and I feel like he couldn't even stand up. He could barely stand up. So like I don't even like say it's all over it. So it was funny. But, like literally it's like that.
Out of 10?
Yeah, and then, yeah. No,
It's alright.
Yeah, do 30 Okay, did everybody grab who's interested in the data analytics? Can you give me these back if you're not interested? And if anybody needs an advisor, I do have the advisor's contact service. Mira. And I would go through this program, thanks, Joe. I would go through this program with a group of people so you can work with each other. Anybody else interested in the data analytics program? Yes, sir? Yep. You can always do it as an asterisk too if you want to do it after. But I would say pound it out while you're here and then get the team and work with others. All right, I will do the, see this in a second. Let's do the finance club stuff really quickly before I get into the class. I do have a sign-up sheet, a booklet that goes out like 2 months. So if you want to book some times with me, sign up. Don't forget to text me or call me to tell me that you signed up. But book some times with me. Everybody should be meeting with me at least 3 or 5 times during the semester. Because again, I can't manage students and student teams when they don't communicate with me, because this is a really intense class. So I like to work with the students in a team-based, project-based. I'm the managing director. You're basically the production team. We work really closely together to make sure that all of the quality of all the projects are up to, basically business standards. Okay, so I don't know if you work really closely with your professors, but I only know how to work really closely with my peers and with my teams. Okay, it's not academics; it's really training. Is what I'm trying to do. I'm trying to train you as though you work with me in a high-performance hedge fund or private equity or investment banking or a broker-dealer or RIA or a bank, same type of environment, same type of quality standards. Okay, so I kind of deal with AXA insurance. AXA insurance for $86, and I'll even fund 5 students if they're serious in doing this. So I will pay for it. Okay, is to basically get your the first leg of the Series 7. The Series 7 has now been broken up. The Series 7 is the registered rep license, which allows you to sell derivatives and stocks and bonds and mutual funds and ETFs and those things. And what FINRA did, which is the industry organization that oversees the licensing for all securities, they broke the Series 7 up into 2. So they broke up the qualitative piece called the SIE, and now the second half is the Series 7 piece, which is the quant piece. It was usually one exam, 8 hours, totally brutal. But now they split it in 2. And the SIE is basically anybody can take the SIE exam as of October without a broker-dealer or an RIA sponsorship, a registered investment advisor. So it's totally new. And then once you get hired, they will sponsor you to go back and get the second leg of the Series 7. And then what you do is you get the Series 66, which is the investment advisory license. And if you're smart, you get the California insurance license, life only, and you get the continuing ed, long-term care, and the variable annuity. Now you can put together any solution and sell anything to any client that has a problem. Okay? And that's what they're going to be looking for you to do. So this gets you in the door. We're willing to sponsor you through the finance club for the first leg of the Series 7. You pass that exam, you can go pretty much anywhere you want to go, okay, in wealth advisory. And if you want to go investment banking, private equity, whatever, at least they'll know that you have a certain foundational understanding of the securities industry. Okay. So if you're interested in that, here's the Series 7 book. I'm going to be calling her today and negotiating that deal and getting that lined up. They want to have 10 people from St. Mary's. I will fund 5. The other 5, I'm going to cut a deal for $86 for the materials. They just told me today it's 116. I'm going to go yell at them because they quoted me $86, not 116, but still that's pretty cheap. to be able to take the first leg of the 7 that will get you in to a bank, investment advisory, private equity, whatever it is. So I think it's a pretty good deal. So if anybody here is interested in something like that, you let me know, and then I will work on getting you in sponsorship or no sponsorship from us. I'll also cut a deal, still in negotiation, but I think I can get it done, is basically if you're serious about getting your California insurance license or your real estate sales license, we'll fund the academics behind that to get the test prep and the courses you need to be able to qualify for that exam and take that exam too. So we'll do that too. I'm still working out the deal with Marissa on that, but if you're serious about that and you'll pass the exam, then we'll probably get the funds to fund you, okay? So don't just sign up and say you're gonna do it. We need people who are actually gonna do it. Because the engineering, the quant sponsorship that they did early last year, I don't know if you heard about this, it was like an engineering programming camp that was funded. We got 100 students, only 1 person finished the camp, so they're a little shy. But I bet if you're serious about any one of these 3, that we could cut a deal and I could get you sponsored. You just have to pass the exam and don't blow it off, okay? Because we need success rates for that too. I already talked about the resumes. Did I already hand those out?
Yes.
Okay, perfect. So you got some really good templates for those resumes. I think Lee's in there, and I know Mason's in there. I know Kimberly's resume's in there too. So look at those resumes, use them as templates. You go to Mary Beth, get your resume updated, and then have me take a look at it at the end so I can help you insert some of the executive level business metrics into your resume to make it an executive level resume, okay? Now, we're gonna do a program. I talked to Mason about this, and I talked to Sam Carlson. It's gonna be the hottest sectors in finance. We're gonna do a program, we're gonna do a panel with like 8 people, and anybody who wants to join the club and help me on this, I'd appreciate it. It's gonna be in fintech, which is hot right now. Also, alternative energy investing. We'll probably throw in some cryptocurrencies into this too. I'm working on a crypto energy deal right now, and then the last one is impact investing. So it's basically, these are the hottest sectors right now in finance. We put together a panel of 8 to 10 people, and you basically just swarm all over them with your newly minted resumes for internships and jobs if you're interested in those asset classes, in those alternative investment sectors. I talked to you about the internships and the jobs. I'm trying to cut a deal also to get the room right next door here, GB 240, for a weekly finance club meeting between 1 and 2 o'clock. Okay, if you can make it, that's great. If you can't, give Mason your contact information, or I'll give you the contact information from the surveys so we can put that into the database. Okay, any questions so far? Am I talking too fast? Okay, slow me down or ask questions if I talk too fast. Okay, so here's the, I do need my, write these down, okay? Write these down. The websites you're gonna need for the course, stockcharts.com. A lot of you in my 123 have already gone through this. Stockcharts.com. And next week when I get through some of this intro stuff, I'll bring it up and I'll tour it. So stockcharts.com, bigcharts.com, Yahoo Finance. So we're gonna do those 5 memos again, so that you can practice, you know, the forecasting and the analytics, and then the derivative trades. For some of you, it's gonna be easy. Once you get those memos done, if you can get them to me as soon as possible, what we're gonna do is we're gonna take those memos as the basis and then expand them into derivative trading. So we'll start looking for the futures and option contracts to basically find out which ones, if your trade is correct, which ones would be in the money and how much you would make. Okay, so we're gonna extend it, all right? So stock charts, big charts, yahoo.com. You may wanna go to Y charts, but again, they ask for a subscription. Seeking Alpha is another one which is really good. I'm gonna give you the, on the syllabus, might as well give it out to you now. On the syllabus, I put my username or my email and my password for the Economist for the Financial Times if you're interested. In the Wall Street Journal, you're gonna have to do that subscription yourself, and I also got a subscription to Bloomberg News, okay? So you're now totally tapped in, you know, to everything that's going on the finance side, okay? And then obviously you all know how to use Mergent, to be able to pull the financial information, to be able to do the intrinsic valuations. For those who took my class, and I'll get to that, I'm kind of jumping around. Later on in the class, I'm assigning the intrinsic valuations. But I'm thinking, instead of doing the intrinsic valuations of the, you can choose intrinsic valuations of a stock of your choice based on the methodology that I presented in 123, which a lot of you should have those templates. Stock you want to choose, or you do a finance product development. You basically propose a new product, okay, a finance product, maybe a fintech product, maybe you want to do an energy fund, maybe you want to do a impact fund, investment fund. Again, this class is all geared towards product development, okay? So we'll talk about that later on, but think about if you want to do an intrinsic valuation of a stock, or do you want to do a financial product development? Fintech product, emerging market energy, impact investment fund, renewable energy fund, something like that. Something that you would propose and market to an institutional investor or client. Or maybe you take that fund strategy and you convert it to an ETF or a mutual fund and we sell it to the retail market. Okay? So that's something to think about. So those are some of the websites. You have the syllabus, the websites are listed on there. The book, this used to be the Bible, the Chartered Financial Analyst exam, CFA exam, was Bodie, Kane, and Marcus, okay? And I upgraded the book to the 11th edition, and I've also posted up on the website all of the PowerPoint presentations, the Excel spreadsheets, the solutions, and the instructor briefs. Because what you're going to do is you're basically going to present the chapters and the problems, you know, from the book. And then I'm going to train you how to build, construct passive portfolios and active portfolios and target portfolios and optimize the portfolios. I'm going to teach you that stuff. And then later on in the book, we'll do Black-Scholes option pricing, and we'll do some other stuff. Okay. So it's taken me a couple years to get here. But here's the book. Anybody want to take a look at it? Pass it around. Maybe you can find it for free on some website somewhere. Maybe you guys want to buy the hard copy, buy the loose leaf. Maybe you want to share it. Maybe you want to get an e-book and share it. I don't care how you do it. Just get access to the content and get some book resources. Okay.
How many copies in the library?
I didn't put any in the library. There's a bunch in the bookstore, right? But I think you can rent it for like $20, as an e-book. You can buy it for like half the price as a soft bound, unless you like hard copy. You could probably search the internet and find I should probably not say this, a bootleg copy if you want to. You could basically buy the book or the e-book and share it amongst your group and split the cost, which is probably a good way to do it. So there shouldn't be any cost inhibiting, reason why you don't have access to the resources. Okay, and I put everything up here. Okay, on full disclosure, just like, here it is. Figure it out. I'll help you out. You're going to make the presentations. You're going to walk us through. I'll totally help you out. I'll do that stuff with you. But the book and the problems and the PowerPoint shouldn't be an issue. You have access to it. And I think it's faster you can learn more content. You can learn faster when you have the resources available to you than just sitting there getting frustrated and stuck. Solve it. You can't figure it out. Get the solution. Figure out how to do it right. Move on. Okay? It's speed. Right? It's how fast you can assimilate and aggregate information as quickly as possible to store it in your memory bank as permanent data, permanent information, or at least know where to go to get the information when you're asked the question and you don't know it. I don't know, but I know where to get the answer. okay, you just gotta get it, all right? So that's the book. I'll go through the syllabus in a second. Pre-test, everybody loves the frickin' pre-test. For those of you who took my 123, you're probably gonna complain, I don't know why he's making me do this stuff again, but you need to go over it again, because it's in the book, right? All this stuff is in the book, but I bring it up front. And the stuff that was on your quiz in 123 is now the pre-test here. Because I don't know if you really know what the underlying foundations you need both theoretically and operationally to be able to develop new financial product. You know what that is? You have computer systems, you have culture, you gotta have an environment that basically is conducive to product development. And I assume, and I'm gonna assume, that you all wanna be product developers, financial engineers, creating your own product, or at least understanding product and process and strategy. When you walk in to an operation, it's like, oh, well, we don't have that solution. Why don't we develop it ourselves? Oh, we don't have that solution. Why don't we outsource it and hire the engineers, you know, and the finance quant people to be able to figure that out? And then we basically private label it and sell it into the marketplace to other wholesalers on a B2B basis. All right, so that's where I operate. Institutional level product development, that's the level that I operate. And then from that, that's really the top down. And then I also sell product too. Sell strategy, sell product. So if you're designing product and you're selling the product that you developed, that's the ideal. So that's called financial engineering. Okay. And some of you are going to go on and do an MS in finance or an MS in financial engineering or an MS in financial analysis or an MBA with a concentration in finance. Or maybe you'll go on and do a PhD, you know, doctorate somewhere, you know, God help you, in finance somewhere, because it's a pretty tough road. But again, that's kind of where we're operating. So the statistical pretest, again, this is going to be reviewed for a lot of you. But for those of you who haven't gone through this, this is not only review of your statistics, but in application, particularly in model building. Okay, I'm being asked right now to basically develop a real estate index. Okay, it's all data, right? So the first thing I got to do is the descriptive statistics to figure out the distributions and figure out how to clean up the distributions to get them normal so we can apply the mean variance analysis and the other statistical applications that assume normality within the distributions. And accounting and finance and operations research and other areas of business all assume normally distributed distributions. So you're gonna have to do some data transformations. So I test you right off the bat. You know, do you understand the different distributions? Do you understand mean, median, mode? Do you know skewness and kurtosis? If you ever have to deal with leptokurtic situations, it's really hard because you got a fat tail and you got skewed distribution. That's a tough one to deal with. Then you got histogram, stem, leaf, box plots, which is all data analytics or data analysis, which you need to do first before you can run regressions. Variance, standard deviation, confidence interval, variance and standard deviation. You hear that, first thing that comes into your brain is volatility and risk. Okay, confidence levels 99, 95, 90. ZTF. If you can show me the equations for the Z stat and the T stat and the F stat, that would be great too. Coefficient of variation. You know that standard deviation divided by expected return. And then show me the inverse, which is the risk-adjusted rate of return. And then Sharpe ratio, Jensen, and Trainer ratios. These are all in your books, okay? And then show me the covariance matrix, covariance equation, okay, which you're going to need to understand to do the quadratic optimization, which is the active portfolio strategy. I went and saw Harry Markowitz at USF like about 3 months ago. This was the guy who got the Nobel Prize to do the quadratic optimization modeling, the theory that basically invented modern portfolio theory and the ETF industry and the mutual fund industry, which is how many trillions now? So based on his mathematical formulas, his theory, he basically created a multi-trillion-dollar industry. Okay, so correlation coefficient, positive, 0, negative. You need the correlation coefficient to be able to understand if you add assets to the portfolio whose returns have low, no, or negative correlation with the other assets, you're going to get diversification. Okay? And then the next one on 7, everybody gets this wrong. The portfolio standard deviation, not standard deviation equation on number 7, Q7. It's the portfolio standard deviation equation. And I'm asking you for 2 of them. One with the covariance on the end and the other with the correlation coefficient at the end. Okay? Because you can write them both ways. Different books write them different ways. What's next? What is the value of using regression techniques? Are you going to be using regression techniques? Yep. Are you going to be building models? Yep. Are you going to try to forecast things? Yep. So you're going to need to know regression. So show me a regression equation with 5 variables. Don't forget to put the hats estimators, the hat estimators on the y, and then the betas, and also the error term on the end. Because I want to see if you can write out a theoretical regression equation. Cross-sectional time series. Time series is basically I got the variables over time. Cross-section, I got the variables, one period of time across multiple companies. Okay? And you might need to use cross-sectional regression first before you use time series, okay? If you're building these models. And then dependent and independent variables, how do you come up with them? Well, usually it's a client or your hiring manager, your boss, says we need to forecast X. And then you got to go out and find the research, talk to a bunch of people, and figure out what the independent variables are that should be in the model to predict sales, revenue, returns, whatever it is you're trying to forecast. Okay. And then how would you select and determine the variables? Well, again, you got to talk to a bunch of people, and you got to go to the library and look through the peer-reviewed journal articles and look at the theory and the research and the literature. Multicollinearity along with heteroscedasticity are 2 of the biggest problems, but multicollinearity is the biggest problem. That means you have too many variables in your model that are not only correlated to the dependent variable, but correlated to the independent variable. So you got to get rid of one. Which one do you get rid of? Everybody says the one with the highest t and the highest correlation with the dependent variable. That's wrong. Usually the one that you leave in is the one that's been cited the most in the literature and has external validation. You don't need the one with the highest T, you need the one with the best citations in the literature that needs to be in the model. So that's just a little secret. And then internal validity is talking to people and getting confirmation. External validity is the peer-reviewed journal articles. And then systematic and unsystematic risk, I can diversify unsystematic risk away. Business-specific risk or market-specific or asset class-specific risk. The only thing that's left after you diversify that all away by having a very large portfolio of assets in the portfolio whose returns are not correlated or as much correlated to each other. I can get rid of the unsystematic risk, but the only thing that's left is the systematic risk, which is economic and political and market risk, which is going to be reflected in the beta. Okay. Assets and liabilities, corporate income statements, cash flow statements, and then the key financial ratios, ROE, ROA, debt to equity, debt to total market cap, PE, EPS, WACC, CAPM, and arbitrage pricing theory. Okay, those are all in your book. Okay, I'm just trying to get you to learn this stuff up front as quickly as possible. And then the 4 intrinsic valuation methods, you all should be familiar with perpetuity, Gordon growth, multiple approach, UDCF. So I ask you to give me the equation and give me an example. Then we get into the underlying fundamentals, unorthodox monetary policy. I'm sorry to say that the Federal Reserve is on an interest rate path hike, 25 basis points. The curve's going to invert, probably could be by as early as September. And we all know once the yield curve inverts, the stock market peaks in less than 12 months, and we're in a recession in less than 24. And we got basically 80 to 90 billion dollars the Fed unwinding its balance sheet at the end of next year. We got a $1.2 trillion deficit from the tax cuts that needs to be refinanced. We got entitlements that need to be refinanced. We got about $1.2 trillion of short-term treasury securities that need to be refinanced in less than 3 years. So we're looking at an inverted curve, guaranteed, it's gonna happen. And inflation's starting to kick up on the short end in inflation in wages and in commodities, which is gonna cause the Fed to raise the interest rate. So it's here, finally. Been talking about it for years with you guys. It's finally here. Yield curve dynamics, I'll go through that, but you guys have all been through it. You know what a normal curve, upward sloping, flat, inverted curve. You should have been exposed to the theories, market segmentation, liquidity preference, expectations, hypothesis. Those are the key yield curve theories. And then we talk about the next on C15, page 15. Where are the capital markets trading right now? You go to Yahoo Finance, they're all there. S&P 500, NASDAQ, Dow are there. You get the 10-year Treasury yield there. You can look up the CRB, Commodities Research Bureau Index, or go to the Bureau of Labor Statistics, get the CPI, PPI, or the CRB Index to look at inflation. You've got oil, which is now trading at the highest it's been in years, which is putting upward pressure on inflation. You can get that on a per barrel basis, either in the spot market or in the forward market or the futures market. And then you got a foreign currency, dollar to the pound, dollar to the euro, dollar to the yen, dollar to the renminbi, dollar to the peso, dollar to the ruble, whatever you want to show there. You should be tracking all of that stuff. And then I'll go through some of the dynamic supply-demand analytics around the asset classes as review. For some of you, it'll be new. I think I need to train you on that stuff again. And then financial product innovation and engineering. Again, there's links to the yield curve lectures embedded in the syllabus. There's financial product innovation and engineering linked to that lecture embedded in the syllabus there too. And when I go through those things, this is review for a lot of people, but it's going to be new for some of you. And I'm going to go pretty quickly, okay? And then you can work with your members to get some background information. If you're still stuck, you can come see me, or you can review the videos. Okay, should get you up to speed. And then modern and postmodern portfolio theory. Again, it's Markowitz, you know, the capital allocation line, the efficient frontier, and then when you add assets to the portfolio of stocks and bonds, such as real estate, insurance, or alternative energy, it's going to bow out the efficient frontier. So yeah, it's going to lower the expected return, but the risk, the portfolio standard deviation, is going to be pulled back significantly, so that return to risk ratio jacks. And if you can get a 10% rate of return for your clients, then your money's going to double in the portfolio in less than 10 years, maybe in 7. And that's the goal. That's it. That's all investors want. And I want you to do 2 efficient frontier. Show me one with positive risk-free rate and negative risk-free rate, because 30% of the globe right now still has negative nominal interest rates. You go to Europe and you go to Japan, they still have negative nominal interest rates. Okay, not real interest rates, but negative nominal. And our interest rates are moving up, while theirs is still negative. That's why there's so much money coming into the U.S. and propping up the U.S. dollar. And then the derivative trades. Okay, remember those, again, practice. You know, what would be the derivative trades on the index, the ETFs, and the stocks in an up market and a down market? Just, again, training you, and then give me some definitions around forwards and futures and options, a swap contract, and what it is to buy on margin and to sell short. This is basically the crash of the book. This is all like the key stuff. And then technical analysis. The book doesn't do a very good job of technical analysis. And what we're going to do in this class is we're going to take the moving average crossover system, a 10-day, 30-day, and a 50-day. And on the website, there is right here the portfolio analytics, Excel spreadsheets. There's a bunch of them that you're going to need to be able to complete the portfolio analytics part of the class. So this is, I know Kimberly and some of you took international with me. You already have this static portfolio. This is going to be your static or your passive portfolio strategy. What I would do is open that as soon as possible, get in your teams, and update the spreadsheet. start picking a strategy, pick a portfolio strategy, identify 25 stocks, group them by sector, come up with a portfolio strategy for the 25 stocks, and then what you do is you go in to the worksheet. The worksheet is really simple. It's really, really simple. I probably make it harder, or you probably make it harder on yourself. Here's the spreadsheet. Here are the companies. Here are the tickers. Here's the prices that you put in. You want to put what I would do is I'd put the prices in there as of January, okay? And then what we'll do is we'll put in the prices as of June, okay, as a forward text. I'll show you that later. So that then you can benchmark to see how your portfolio is done since January. And then we'll go back 1 year, 3 year, 5 years, 10 years, and benchmark your strategy off the S&P 500 and see if you were able to actually create an alpha, from your portfolio. You'll start off with $1 million. Here's the 10-year, here's the S&P 500 10-year, and here's the alpha. And then if you go, let's see, where is this? If you pull this up, and you go to this right here, this target portfolio right here, that's your base period. So you're going to put the January numbers in here. Then what you're going to do, you can use, actually Daniel did this one. You put in market cap, or you can put in revenues right here. And that's all you got to do. Put in the revenues or the market cap. You could use equity or total market cap. But I would use market cap of the equity or use the revenues. You put that in here, it becomes a scaling factor. Boom, does this. You put in the prices times the number of shares. It's going to give you the total aggregate value. Those are going to come up with the weights. And everything is programmed. So the only thing you need to do is to put in the market cap or the revenues, put in the prices, and then put in the, I think everything flows to, that looks like it was hard-coded. So then you go back. So that's your target portfolio. I got instructions right there. Here's your one year. These don't change. The only thing that changes is the price. So go back go to January 2017. Put those in there, and then go back 3 years. Put the prices in there. Go back 5 years. Put the prices in there. Go back 10 years. Put the prices in there. And if you don't have 10 years of data, just as far back as it goes, maybe it's only been around 5 years. Just put in the 5 year and the 10 year in the 10 year slot. So at least you have some data in there, and it's going to calculate the benchmarking. And we're going to use this spreadsheet 3 times in the class. We're going to do it first in the passive strategy, and then we're going to, later on, we're going to do the quadratic optimization, which is going to kick out the active weights based off the covariance and your forecasts of the returns on the stock. You're going to put those, you're going to recalibrate the weights and back test it again into the active strategy. And then you're going to come up with the last target strategy with your min-max exposures, and you're going to use your passive and your active to come up with the target allocations and back test that. Okay. So this passive strategy Excel template is extremely important. And then also in here, there's a moving average crossover Excel spreadsheet. You're going to have to pick a portfolio manager, a technical analyst, and a fundamental analyst in your team. Okay? And the technical analyst is going to print out all of the, and I'll go over this a little bit later, going to print out the 3-year price charts for all 25 of the stocks with a 10-day, 30-day, and 50-day moving average crossover. And they're going to mark basically the buy-sell signals and basically identify when they should have bought and when they should have sold those stocks. And they're going to put it into the spreadsheet. And the spreadsheet's going to calculate the trading revenue that you would have made if you implemented this technical moving average trading strategy. In almost every one of my cases, all of my teams over the last 2 years, on average, they made $100,000 a year gross on $1 million. Okay, so they made basically pre-tax or net of fees, they were making at least a 10% compound rate of return on their portfolio every year over a 3-year period. So this thing's a money machine, okay? It's a money machine. So if you implement it in your own 401k, in your own IRA, you're basically guaranteed $100 grand on $1 million going forward for the rest of your life. And if you're 20 years old, by the time you're 40, you're gonna have between like $4 and $6 million in the bank. It's just implementing this strategy, just the trading strategy, okay? So we'll go through the technical analysis, and I think that's where I ended on the trading test. All right. Whew. How much time do I have? 13 minutes, okay. So here's some samples of the memos for people who didn't go through the class, other people who didn't do a very good job on the memos. Last time in my class, here are some samples of the top memos that I pulled out from all my memos that I did. And then I have a whole, also on the website, I got sample resumes, and I got sample memos. Also here. Oh, and don't forget, here for the statistical pre-test, here's all the resources. The book's a good statistical resource. This is a good resource too. Okay? And then you can use Google. And if you have the exam from last semester or a year or two ago, I would add to it. What else? Here's the resume templates. Here's the portfolio analytics. Here's the key on the portfolio analytics. You gotta be careful, people. I had 2 teams last semester that basically were using the Excel spreadsheet in Google Share. They were using they blew up the spreadsheet. Okay, so you can get Microsoft 365 for free. Okay, did you know that? Yeah. So you need to designate one person to basically oversee the spreadsheets. You guys can work on them the same, but the quadratic optimization, the active portfolio spreadsheet, you can't share. You're gonna blow it up, okay? And you'll get really, really frustrated. So designate one person, or make sure that you bring it up, you work on it, you save it, but don't share it, because you're gonna blow up the optimizations, internal to it. Okay. Let's see, how am I doing on time? This one, how much? 10 minutes? So this is basically the strategy for a lot of the class. We have portfolio construction. We're building portfolios.
You were saying what messes up optimization?
When you try to, because Google has a spreadsheet,
Yeah.
and then when you start sharing the Excel spreadsheet,
Yeah.
it blows up the program embedded in the software. Yeah, because you have Excel,
Yeah.
right? And then what you do is you start sharing it, and it blows up the spreadsheet. You don't share it. So you just open it up, you work on it, save it down, and then you let the other person work on it, you don't have it simultaneous. Okay? So here's the portfolio management process that we're going through. So we're gonna first do the static passive approach, then we're gonna do the active approach, the optimization, the Markowitz approach. Then we're gonna do the dynamic active approach. We're not gonna do unless you guys are super smart, where basically we add in the fundamental technical analysis. Actually, we do that. That's where you're doing the technical analysis and the fundamental analysis is step 3. And I do have on that analytics up here, the analytics, no, not the PowerPoints, but where's the spreadsheets? They're up there. We have another Excel spreadsheet that does the technical analysis, the moving average crossover, and we also have another spreadsheet that does all the fundamental securities analysis, okay, automated for the 25 shares. So that's all you gotta do is go in there, put in your projections for the earnings per share for your stock, and it's gonna kick out basically the intrinsic values for each of the individual shares based on the 4 methodologies, and I'll walk you through that too. Dakota Armor programmed that one for us. A lot of this stuff was programmed by the students. And then the last, the aggressive dynamic active approach, is not only where you build the portfolio, you do the passive, the active, you do the technical analysis, you do the fundamental analysis, and the last piece is you managing the portfolio and the stocks within the portfolio. You're doing the analyses, and when you come up with the buy-sell recommendations, you don't sell the stocks or necessarily even buy the stocks. What you're doing is you're basically applying the calls and the put options in the futures contracts. So the last piece, the step 4, which we never got to, is basically if I built this portfolio and I got these buy-sells and I'm managing it, and I can also go short and buy a margin, but what if I wanted to go be a long short and be a dynamic, aggressive portfolio manager and basically use derivative contracts to either hedge off risk or to juice the portfolio returns using the derivatives? Okay, because then now you're leveraging the capital that you have available to you. The last thing I'm going to do is I also have one of my students. Her name is Alexandra Morris. Okay, she works at Merrill Lynch. She got hired at Merrill Lynch. I think they're paying her, I don't know, 50 grand a year to get licensed and to build her business off the Merrill Lynch platform. And she came back last semester and she basically said, just take one per group, please, and said, this is the platform that you guys can use if you want to. She will come in and train us how to use the platform to be able to trade your securities off the platform. I also cut another deal with a company called Equity Sim. You may want to write this down, please. Equity Sim, basically equity simulation. Yeah, Equity Sim. And they're going to give me on the 27th, what's today? 27th, so they were supposed to get back to me today with the new version. So once you get the 25 stocks, okay, and we back test it using the passive strategy worksheet, okay, then we take those 25 stocks and we put them into the Equity Sim software and start trading the securities and see how you do by trading the securities based on some rationale. What they told me is that if you sign up for that and start trading those securities based on the performance of your portfolio, if you rank in the upper 75th or whatever percentile, not only here in the university but also compared to other universities, you basically get placed in a queue to be interviewed at Goldman, Merrill, Morgan, JP, US Bank, with the top investment banks and the security firms. So it's a recruiting tool also for the top banks and the top wealth advisors. Okay, so I'm adding that in this semester too. Okay, so how much time do I have?
5 minutes.
5 minutes. Okay, so let's look at the syllabus. Okay, I got all the dates on there for the exams. If we have any exams, it's probably going to be no more than maybe 3 to 5. Okay. Now, team 1, 2, 3, 4, 5, and 6. I've already designated what your responsibility is in regards to the chapter PowerPoints, and then there's not a lot of homeworks in there. So when you do the presentation, you present the PowerPoint and then the homeworks. The PowerPoints are already in there. So I've already gone through. I've already assigned the teams. I thought there was going to be 8 teams. There's 6. So I'm missing.
There's 8.
Is there 8? Okay, perfect. So everybody's got the assignment. The homework problems are already there, so you know it's not brain damage. So, you know, and if you're working in teams, you should be able to get up to speed pretty quickly, and I will augment a lot of that. I would go ahead and read the syllabus, because the syllabus basically lays out a mind dump, basically a synthesis of the 2 undergrad degrees, 5 masters, and the doctorate degree along with the 25 years experience in corporate finance. I basically wrote the first part of the syllabus as a synthesis of all of that stuff, encapsulating what you really need to know as a true finance major, not only as in your senior year, but also if you're gonna go on to do a master's and then maybe even a doctorate, I don't know, or a CFA or a CFP. So I would read it, okay? And then the first thing you should do is go review the yield curve dynamic videos and the product development, okay? Because that's basically the foundational aspects associated with the class. Then we got the memos, and then I'll go through the projects, you know, and what we're gonna do. And then the last piece, the projects look like this. So again, I don't know if I have time, but you can take pictures of this. But this is what the final book looks like. Okay, this is the book. It's got your active strategy, it's got your passive strategy, it's got your target strategy, it's got the moving out of crossover technical system, it's got the fundamental securities analysis in there. So this is basically the book that students prior to you have been working their butts off. Really, the semester should get you there. And what I'll do is I'll upload some templates onto the course website. So you're not building a lot of the formatting templates, you're using that as basically the template. And you do the analysis and you update the templates and build the book. Okay, and then that book, along with the presentations, becomes basically the Bible that you're going to show the prospective employers, but you do not give them the book unless they sign an employment contract with you. Okay, because this thing's worth like 25 million bucks. Seriously, it's institutional grade investment strategy. That's what you're building, is an investment strategy. This is it. Technical, portfolio, fundamental. It's all presented in there. You got the memos, you got the pitch books. It's everything you'll need to be able to then walk in and say, well, what kind of work do you do? What kind of work have you done at school or you know, in your internships? Can you show them some product that you can do, show them the quality of work that you can do? You show them that, you're going to get the job. You'll get the internship, guaranteed. Because the Cal guys don't, and people from Stanford can't do it. They're not prepared when they walk in. They don't have a portfolio and references and letters of recommendation. Okay. All right. I know I went through a lot. If anybody's confused or frustrated or want to talk with me, I'll be in my office. I will be in my office from 7 to 9 every day, and from 1:30 to 3:30 every day. If you want to meet with me anytime when I'm not teaching, I'll meet with you. You can call me, you can text me, and I'll get back to you rapidly. And if you want to email me, I can't promise you that I'll get back to you right away, but if you text me and call me, I'll totally get back to you as quick as possible. So I'll take care of that. I'll take the surveys, please.